You could go make, let's say, $1 million, but when you pay tax on it, you're going to have to pay 40%. Isn't it a lot easier to make $1 million and then just go buy the amount of property you need to buy so you pay no tax on it and you build long-term wealth because you're getting good deals? Like for me anyways, I discovered it back in like 2017. I started using these different tax vehicles such as self-directed IRAs and then depreciation. I started buying rental properties in 2017 and I could see on my tax return, I'm like, dude, I made a lot of money. And then I'm like, I don't owe as much as I thought I was going to owe.
Right.
And it was because I was just starting to buy rental properties.
All right, quick reality check on this. Make $1 million, buy rentals, pay no tax pitch. First, if you make $1 million, you don't automatically pay 40%. That's a marginal bracket soundbite. Your effective rate depends on your situation, the type of income, your state tax, and your deductions. Second, buying rental properties does not magically wipe out active income. Most long-term rental losses are passive under the IRS rules, which means they generally do not offset W-2 or active business income unless you qualify for an exception, like real estate professional status, plus material participation on that. Or you're going to do like a short-term rental structure where you materially participate on that as well. Otherwise, the losses get suspended. They're passive and they're carried forward. Third, depreciation is real and powerful, but it's usually a deferral. It's not elimination. When you sell, you still have depreciation recapture and taxable gain unless you have a smart exit plan. Fourth, even if you clear the passive loss gate, people forget that there's a net loss limitation rule. Excess business losses can be capped, usually in the $600,000 range, and kicked into a net operating loss carry forward. So the idea that you can just buy enough property and wipe out all your income taxes in one shot is often not how it actually plays out. And finally, the self-directed IRA line gets thrown around like it's a cheat code. It isn't. There are prohibited transaction rules. There's something called UBIT and UDFI if you use leverage. One mistake can blow up the tax benefits. The real takeaway, real estate can absolutely be tax efficient and a wealth builder, but it's not a magic eraser. You need the right facts, the right participation, proper documentation, and an exit strategy.